Hi, traders. Welcome to the end of the week, the end of the month, end of the quarter, virtually. Well, many for, and including me, will wrap up Friday and wrap up the week and the month and the quarter, and indeed the half year. Obviously, Monday is the actual last day of June, but enough's enough. I'll start July book on Monday as well. So we've had a good June. We've got some good trades still open. Some stop losses have been raised and or lowered, and some of them maybe touched, some of them haven't. So we'll wrap it all up. I'll update everything for the first half of the year over the weekend as well. Get some. Actually, I'm babysitting, so I probably won't get some time over the weekend, but we'll do it on Monday or later on today. See how things go for Friday. So I hope you're all well. It's the 27th. It's Friday. Very, very important piece of data to drop in about 20 minutes time. We've got the PCE price index. It's the Fed's preferred measure of, I hope you can see it there. It's expected to come in at 2.6%. It'll rise up from 2.5% for April. Probably won't change anything as far as the Fed are concerned. I'll come back to that in a minute. But it's key. It's their preferred measure of prices rising or falling in the United States. So PCE, personal consumption expenditure, the detail spending and consumption key. We've also got later on the Michigan, the University of Michigan, the UOM inflation expectations and consumer expectations. More important, remember the consumer board confidence numbers fell quite significantly this week. Yesterday, we had some sort of mixed data. That pending home sales was a surprise tick up from a big negative tick in April. Remember, the new home sales we'd seen the day before were a significant miss at 623,000, although it's still a strong number. You know, anything over 550, my book is always good for new home sales in the US. So the jobs numbers were showing some signs of weakness. GDP looking back was okay, but there's some signs of inflation within the durable goods and the GDP price index as well. So this idea that Trump's saying that inflation's gone is a bit premature, but it makes a great headline, doesn't it? So then later on in the day, as I said, pending home sales remained a surprise to the upside. And Mary Daly, the Fed chair for San Francisco, was very playing the Fed line. You know, we're waiting for more data. I made a note of what she said yesterday, didn't I? I can't remember what she said. Labour solid suggests slowing. But not cracking. Goldsby earlier on also said how the Liberation Day, this 2nd of April announcement, has unsettled the Fed. Barkin was very much in line. And then this morning or overnight, the administration has come out, as well as Pete Hegseth's very victorially press conference that everybody saw. Where he was ripping into the press he disagrees with. The rest, Lutnick and Besant this morning, the two major trade heads of secretaries, very bullish on trade deals. 10 deals imminent, says Lutnick, but he's like Trump, he's a great headline producer. EU, we're talking about new proposals from the EU. Macron's talking about 10% will be reciprocal. I think we talked about that yesterday as well, didn't we? And this 9th of July deadline, the week after next, remember that's been the key deadline for doing deals. That's what Lutnick's saying could be done by the 9th of July. Yesterday, when pushed, his press secretary said, you know, it's up to the president whether we slip the 9th of July. And then the real grown-up in the room, Scott Besant, has talked about Labor Day in the US being probably when trade deals could get wrapped up. Trying to do trade deals this quickly anyway is, you know, really, really ambitious. So how much detail there'll be in them is somewhat questionable. The market is still saying I'm in that camp. But he's talking about Labor Day. Labor Day, remember, it marks the end of the summer in the US. It's a major holiday and it starts the run into the end of the year. So it's actually 1st of September, it's first Monday in September this year, and it marks the run-in into the year end. So Labor Day is the target that Besant has talked about. So it's likely that will run out. Neil Kashkari, in an interview, I think it was a CNBC, is still talking about 2 rate cuts for 2025. September being his expectation that it will cut first. So and then probably December. Didn't actually say second one, but so he's still talking about 2 rate cuts. So he's gone from quite a ultra tough centrist to one of the key hawks. He's not in the radar for the new chair Fed, which caused all the fuss and the movement yesterday. Still some, Rush is in there. Even the 2 guys, Michelle Bowman potentially and Chris Waller, is still sort of kicking around. So we'll see when it all pans out, and if this September-October timeframe starts putting pressure on Powell, that markets hate that sort of thing. But anyway, we've certainly the dollar's remained under the cosh. So we're waiting. Where are we? 5 minutes now before the here we are. 7 minutes here before the PCE data. So this comes in hotter. There'll be a bit of a surprise. If it comes in weaker, there'll be less of a surprise, I would add. It will add more weight from the administration. The argument they've been saying all week about there being no inflation. Perhaps they've got heads up on some of this data. But we'll see. And also, don't forget, as I said earlier, the consumer sentiment numbers out of Michigan have lifted surprisingly later on this afternoon in an hour or 2. So anyway, let's have a quick scan of the markets. These are some of my open positions. Let's go back to the majors. Actually, just start from the top quickly. Where have we got? We got 7 minutes to run through them all. Okay, so Bitcoin this morning holding its weekly bid. Got the daily chart again. So we've been up 4 days. We cooled a bit yesterday, but we're cooling at the relative highs for the week. Obviously, way over this 100,000, 107,000. So we're over the 105, 106 resistance zone. So that's still positive going into the weekend. A break of 105. Again, quite quickly we can come back to the 100,000 level. But Bitcoin remains consolidating at highs, which is always quite a good sign. And this downtrend here was broken. These downtrends we've broken. So we got a little up leg here, and we got a potential up leg here. So we got this it's W shape forming at highs, top being 111,000, bottom being 100,000. Wait and see, my friends, but remains relatively bullish. A lot of the cryptos and stablecoins all over the place. Oil, I haven't actually looked at the oil market this morning. US oil 66. So we're back to the this area we're talking about yesterday, under this key fib level at $67. This 50% level of the rally we had from May to the peak from is it only a week ago? It is only 2 weeks ago, isn't it? The Israeli attack on Iran. And we've given up 50% of that rally we'd had, or the panic move. We've given up virtually all of it, and we're back to where we were at $66. So sideways action, waiting for some direction. Big support at the 50-day moving average. It's at 64 now. The 67 level here sits at the 50% fib level, and then the next fib level up to the upside takes us to 69. So some significant round numbers there. Obviously $80 a step too far, and the $75 still seems a way away as well for oil, but anything can happen. And obviously things happen over the weekend like they did 2 weekends ago. So in the Forex market, the dollar remains very weak. 65, let's run through them in order. 65.40 for the Aussie dollar. We got a long trade last night. I was out with my brother last night. My brother turned up as a surprise yesterday. He's going to get his daughter from Gatwick Airport, and he knocked on the door at 8 o'clock. So we ended up down at the pub, and I had too much to drink. So I wasn't going to post anything later on. But the system, my trading strategy triggered long on the Aussie, long on the Kiwi, and short CAD dollar. So the three major major dollar crosses long Aussie to 65.95 is the target from yesterday's close. So 65.95. I'll update this later. This will remain open into the new month next month. Kiwi 60.82. So this was long from last night. It's down a bit at the moment, so we're out the money on that one. But it remains, as you can see, very very positive week so far. I mean, it could all turn around today. I very much doubt it. So 65 is a key upside hand. Can we hold that? That'd be absolutely key for the Aussie moving into next week and into the new month and the new half of the year. Actually, we do this in order. Dollar CAD triggered short on this big down candle last night, and we've got a initial target of only 30 pips, 136.09. So under the 130, this low here we had last week. So 136.09 is the first downside target for dollar CAD. 100 odd pips is the extended target on that one. Swissy remains open. We've pulled the stop losses on both of them down really tightly. They're both the stop losses down here, so we continue to unwind. We're under .80 now on the Swissy. Swissy, the best performing against the weakening dollar. We're trading at 79.85 at the moment, so the trend remains to the downside. That's a position and a half still open on the Swiss franc. Dollar yen, we closed. We were short. I think we were short that and got closed out, but that's out. We are currently 144.60. 2 minutes of the data. We'll go back to the calendar in a minute. Kiwi 60.66. As I say, we were long Kiwi to 60.82. We might have got quite close not this morning. 60.76 is our top. So 60.82 is our top line, and obviously next upside target is .61. So again, another strong week for the Antipodeans and the commodity currencies. The Antipodeans being the Kiwi and the dollar, and the commodity currencies we had in the CAD, and it's a weak dollar story continuing. Euro 117.27. I think this might have this is still open. The stop loss, I can't remember where that stop loss got dragged up yesterday. It's still I don't think it got taken out, but anyway, that's either closed out or we are still long or close half it out. But yeah, we went to yesterday's target. Remember, we went to 117.40, this blue line here, 117.40. So watch that later on today as well. Let's see what this data looks like for the euro. We'll obviously come back to the euro for the main data. Let's get rid of that one out of the trade. And sterling also still live. Our stop loss is here now at 136.90. Another great week from this test of the 50-day last Thursday and Monday, and then off we've rallied to these new yearly highs for cable as well, 137.32. So dollar weakness continues. A cranking down of the rhetoric against Mr. Powell would probably help the dollar. President Trump, I should say. Excuse my Freudian slip. So indexes continue to rally 6160 for the derivatives here before the cash market opens in an hour. 6160. So new all-time highs were busted yesterday. Strong day yesterday. Closed at new all-time highs on the S&P 500. Over 6,100. 6,143 was the tech cash close. We closed above that. So again, rallying like the dollar's collapsing. Stocks up and continuing. Just stay with it. Yeah, we are up. Keep your stop loss relatively not too close, but up behind there. See how we can hold 6,100 going into the weekend. Nasdaq 22,500 now. Remember that 22,000 was a big resistance to the upside. Data's come. Let's go back to the data, see how it's come across. That was durable pending home sales from yesterday. So a core PCE 0.2 of 1%. So it is a bit hotter. It is a bit hotter, but it quite sick. Well, relatively sick. It's double what was expected. That might cause some questions to be asked in the White House. That might cool their rhetoric. I doubt it very much. But this is what Mr. Powell and most of the Fed have been saying. Let's just update our calendar here to Friday. Sorry. Thursday, Wednesday. Oh, God, this calendar. It's my complete. I didn't try to do it live. Yesterday's data, pending home sales, inflation last night. European inflation was a bit hotter actually this morning. Yeah, I should have mentioned that before we started. Yeah, should have. Oh, it's got everyone. Here we are. So 2.7%. So last month's been upgraded from 2.6%, 2.5 to 2.6. The headline is 0.1 higher than expected. The monthly for May is twice as big as was expected. So it's only 0.2, but it was only supposed to be 0.1. So that's adding to what Powell has been saying about the inflation hasn't gone away, it's coming back. 2.3% for the year-on-year price in the core. The personal income, interesting, a weakness worse than expected. It's got turned negative. Personal spending has also turned negative. So income has slipped, and real consumption has slipped significantly as well. So that is what the Fed were sort of not expecting, but sort of worried about, touting about. It is only 1 month. We have gone backwards though. If we look at the upwards, I should say. From this, we look at this calendar. So it's not really detailed here, but you can see here on the Forex Factory chart here, you can see the number we've just seen here, twice what was expected. So it's ticked back up to where we were earlier in the year. Obviously not as high as we got to in March and February, but back to January's 0.2 of 1%. It looked like it was lowering. This is the one the Fed use as for their indicators. So for the president said the inflation has gone away. I mean, see his point. He was saying, raise rates again in a year or two. But this is what's really irking the president, the fact that the US sits as an outlier here, along with sterling, above 4% for their standard rate, and the US top of this central bank table. It's not very often that happens, and that's really irking the White House. So we'll see how markets have reacted to that hotter than expected PCE data. Let's just have a look at the 5-minute chart on the Nasdaq. So Nasdaq down, dollar might have ticked up a bit. So Nasdaq down, but still well over 22,000 in the immediate. So let's have a look at the Forex market, more importantly, with the movers. Euro 117.35, lifting. In fact, Euro's lifted, so more pressure on the dollar. Yesterday's 117.40 looks very much an upside target today. Now that might get taken out. It depends what that data looks like later on. So dollar under pressure again. Stocks have slipped on that data, and it's not a particular surprise. Futures up 0.28 of 1%, 17% on the S&P 500, but that's hotter than expected, that's for sure. Sterling 137.45, we're up to the upside. Our short-term trades are still good and in the money, and the Swissy again, big move down there. Look at that, we went all the way to 79.66. The Aussie, the key, I don't think I'll be able to show you on this chart, even if we go to the monthly. No, way it doesn't go back far enough, this platform, but you can see what a really weak week we've had, and we've been the right side of this one this week, the Swissy, 79.66 at the moment to the downside. So we are very much trailing our stop losses down. There's our take profit. You can see down the 1 hourly chart. So we're pulling this stop loss down, taking some money off the table before the weekend, quite possibly. Again, as I said, I will let you know about that later on tonight. So we had those 3 new trades last night: Aussie long, Kiwi long, CAD short. Earlier in the week, we'd still got lots of open trades. Kiwi CAD was long, Kiwi yen was long, and then we had a pound Swissy. I don't know, they all panned out, but we'll look at all of those from Wednesday. And there were some other trades last night, but I only took those 3 major Forex ones on the system. And that, so we now have open trades on euro, pound, Swissy 1.5, Aussie, Kiwi, and the CAD. So all the majors, we have open positions apart from the yen, and they're all very biased one side. So I'll have to check the risk exposure there, because it could suddenly turn around. But we've certainly got pips to play with on that one. So a big exposure against the dollar, but isn't everybody at the moment. So dollar remains under pressure. Metals, gold, 32.71. So we're really continuing to unwind in with the weaker dollar. Gold this morning breached the key 3,300 level in early Asian trades, and we've continued to decline during the European session as well, 32.73 to the downside. So this has been moving lower most of the week, when we broke through this 33.30 sort of area we were sort of meandering through earlier this week. You can see this sort of up and down. There was that breakout yesterday we were talking about. There's our 4-hour upside, and we broke out. Remember, we were talking about this yesterday. So remember, when you see a triangle like this, the distance we could travel could be the distance of this side of the triangle. So the break from here could take us down, and we're continuing to unwind. If we just run up to that was on the hourly time, at 4-hour, I think there weren't these 4-hour and daily trend lines we put on. Yeah, that was a daily trend line. I think this is the 4-hour trend, and you see that a bit more exaggerated move, but a very, very significant move down for gold once the 3,300 had been breached and broken here this morning, and we followed through into the US Open. So that was a target level from earlier in the month, down here at 3,272. Next level here on the 4-hour, probably next level is 3,260. And then as far as this chart is concerned, next level will take us to there's that 3,260. The intraday, that spike then into this group here. Can't draw the triangle, but there's our sort of cluster through there, which takes to 3,220, and then 3,200, remember, which we tested back about in the middle of May, about 6 weeks ago. So gold weakening into the weekend, and a fairly typical, if you look at the daily chart, quite a strong Friday candle currently. Fridays, Tuesdays can be quite extensive, but as you can see here on the daily trend line, that's what that big one was, wasn't it? We drew it earlier in the week. Is confirmed. We've been under the 20-day moving average all week from that first move down on Tuesday. Consolidated Wednesday, Thursday, and then another leg down today to see where we are here under these lows here. So that on the daily time frame is probably the 32.30, 32.30 from this May 20th candle, and then 3,200 itself. So daily remains short from Tuesday. That's not a trade I'm actually in, but that's what this strategy would have pasted that. And this break here today, significant break at the 50-day moving average, will add positions we're using this strategy, because we haven't been under the 50-day move. Now look at the significance of the move for the gold market, my friends. This is the 50-day moving average. Remember what that is? That's the average over 50 trading days. That's well over 2 months. So all the way back here to the beginning of the year, when we were last under the 50-day moving average, and then it wasn't trending, we were consolidating at these lows all the way back here at 2,600, and we've been all the way to within a smidge of 3,500. So massive 2025 for the gold market. Central banks, governments, fundamentals, rules change, all added to the bid on gold. Obviously the geopolitics added to it as well, but we're seeing some cooling here on Friday, into the end of the week, into the end of the month, into the end of the quarter, and into the end of the half year. So profits getting bagged this week, clearly on the gold move. Guys, sorry, let me just check. Rua's not here with me today. He's busy elsewhere. Let me just check if there's any comments. Sorry, guys. Jose, why did Euro slip on such data? It makes no sense. Jose, don't try and rationalize everything. Okay, it did. It just has. The fundamentals remain pressured for the dollar. So although the data would have suggest that it should have rallied, it didn't. So the price is always right. Whether we think it's right or wrong, it doesn't matter. The price is the price. That's the price you have to trade at. That's the price you're either selling or that's the price you're buying, depending on where you fit, what's your system saying. So again, if we just go back to euro, I mean, it could have turned around then since we've been talking, but here, and again, depending on your time frame. So the daily trend is up. So you're looking to go long, on anything below the day or on the daily trend or anything below the daily trend. So the hourly trend has been sort of meandering this morning, but it's been biased to the upside because we've been more or less above. Actually, that was yesterday, wasn't it? We've been, well, it's difficult to tell. That was the positive candle this morning on the European. So the European Open, euro dollar has been positive. We drifted down for 4 hours and we're up again this current hour. And as I said, unsurprisingly, we're in a smidge of testing yesterday's 1740 high. It just is. So hourly has been long from this morning. So when you're trading the shorter time frames, you want to be looking to take the long positions here, there on the 5 minute, here, there, as it's gone into the 50 and up here. It's come back against you obviously here. And then if you wanted to trade it before the major news, it was a big long candle, a big positive candle taken out that previous 10 minutes. This is literally only 5 minutes. So two quite strong down candles under the 20-day, 20 period and 50 period, but the moving averages are flat, so they're a bit negative. You can't really say this is trend, but that's a positive candle. That's a positive candle there, ahead of the data, quite a new high for the day. It was a bit higher here on open. There's the open at 8 o'clock, so that's what you'd be looking to break, and we broke that as the data came out at 30. We're giving a little bit back now. And yesterday's high 17 point might be a tad too high, but you're still long here on this. So don't get too hung up about whether it makes sense or not, my friends. Why do you trade so many trades? Because that's what my system does. My system scans 50 odd assets, and I make sure I don't have too much risk on open. 7, 8, 9, 10 trades is sort of the maximum. I don't want to have it open at any one time. Too much risk, you get caught out. I'm a bit twitchy having all these short positions against the dollar, if you like. But the trend is with me, so I'm quite happy. That's why, I've been doing it a long time, Jose. So it works for me. Obviously, if you're new, if you haven't been trading for very long, concentrate on one or two assets. I'm going to do a webinar on Monday about scalping, the shorter time frame, and some of the ideas I approach scalping. So look at, if you're doing this manually on a short-term basis, you don't want to be you can't look at 40 or 50 assets. Obviously, you want to be looking at 1 or 2 or 3 or 4 maximum. Depends how your screens are set up, but that's what I mean. But thank you for your input. What's this? How should I approach the trading then, if not rationalize fundamentals converting to price action? It means gambling. No. Yes, you understand the fundamentals. I mean, fundamentally, nothing's changed with the data. The data was a bit hotter than expected. It was a bit, but the Fed members would say, well, this is what we've been saying. We're saying that it may be a bit hotter than expected. So the fact it's hotter, let's just go back to the euro here. Let's go back up time frame. So the hourly time frame, sort of waiting for the data today, haven't we? Waiting for the data. We're over this 117. That's a big psychological line in the sand. 117.00. You see this all the time, Jose. Zeros and fives. Lots of people put their stop losses, their targets around these levels. You saw yesterday we went to 1740. We haven't quite got there yet today. Perhaps we will, perhaps we won't. It doesn't matter. But see, you could argue that's a triple high, perhaps on the hourly chart. But don't get too complicated about it. But yes, understand the fundamentals, but don't get too hooked up if you're trying to trade 5 minutes or 1 minute. It's all about what time frame you're trading. I'm an end of day trader, so yesterday it was a strong daily candle Another strong daily candle, the fifth one in a row. Look at these. Big one here on Monday. We'd been ticking up a bit on Thursday, Friday. Big engulfing candle. See how that candle there on Monday is taking out all of the action the previous week. Where do we stall? Well, we stalled just below the next big round number, which was 116, which we hadn't been able to close above the previous week. But the trend has been up since we've been above this red line, as far as I'm concerned, since the 20th of May. Okay, so I'm looking to add to my position. I'm looking to add to a long position. The size of the body of the candle is also very, very key. So what you have to do, Jose, and everybody else out there, is find something that works for you. Find a strategy, find a system, and whatever it is, a mentor, a guru. I mean, obviously, take them on with a great big pinch of salt as well. A lot of them, a lot of them are scammers, and they just want you to pay for their courses, and a lot of stuff is free. Don't pay for training in forex or trading. There's lots of, you can find, fill your head with as much free stuff as you can. There's lots of very good people out on X still, out on YouTube, lots and lots of free stuff, and understand what's going on. But the most important thing I say all the time, I'll say it again on Monday, is understanding yourself. How do you deal with risk, Jose? How do you get the gambling mindset away? You've just got to accept that you will have lots of losing trades. And how do you keep sane doing that? Well, you make sure that when you do lose, you're only going to lose 1 or 2% of your account when you do get it wrong. I mean, all these dollar trades I've got, it could suddenly go wrong. Trump could say something, somebody could resign, there could be, another event, and all of a sudden I get turned around, I get stopped out. But because my stop loss is rammed right up to where the price is going, I'm not going to lose any money on them. So that's quite lucky. Some of the new ones, less so. So it's, finding something that works for you, my friend, and it's all in the price. The price is king, and that's why technical analysis works. It doesn't work all the time, but it works well enough. Most systems, most approaches work well enough to make money. The problem is most traders, or all traders, are human beings, whether they're from the southern hemisphere, the western hemisphere, the eastern hemisphere, wherever they are in the world, whatever they believe, their religious belief, their creed, their color, whatever they are, we're all human beings, and we all act with our brains. We all get scared. We all get too confident. We all get wound up about money. Money is a simple energy. It allows you to do other things. It gives you time and confidence to do other things. So you're looking to try and get consistent and comfortable with your trading strategy. If it doesn't work, try a new one, because you've got to apply it. I say I can show you 7, 8, 9 systems and strategies that work. This one works. This one here, this crossing, I call it the EMA crossing, the 5, the 9, and the 21. That's what we've got here. We've got the 21. We've also got the 50 on here, but this is the 21 exponential moving average. The 9 period moving average is the green line, and the orange line is the 5 period moving average. So they're all looking for trends. So when they're like this in line, this is great. This is exactly what we want. When we're going sideways here, that's no good because we're flat. It's chopping. So you want the moving average to be at an angle, some sort of angle, like this big green one here. It's been going up the 50-day. The red one's been going up, but much more of a loop. Obviously, the green one and the orange one are much closer to the price action, so they're more volatile. They go up more and more. And so this happens to be on the daily time frame. Each candle is a day, but you can do exactly the same strategy, looking at the hour, or even looking all the way down here at the minute, but using the same rules. So we go long here at 13.11. Possibly, well, let's ignore the green line for a minute. So that's gone long. It's come back to, it hasn't gone under the green line. It's gone under the green line there, out, back in again here, touched it, out there, back in again there, long, out there. Short here because it's crossed, and then we've gone here at 13.44. Stop loss probably up here or up here, turned around immediately, gone long again there. So that short has failed. This short here at 13.44, we've gone long. The system, again, you can program this or do it manually. That's gone long again at 13.49 here on the 1 minute time. This is literally 1 minute time frame. And look, we've gone through, what did I say? We've gone through that 1744. Not immediately, but a first rally, cooled, and then rallied again. So there we go. 5-minute traders would have bagged their profit at a new high. So we're performing a new, what do we know about 1740? Well, it was yesterday's high. Remember, we were talking about it being a triple high on the hourly chart. Here we are. Oh, excuse me. This high here from the when was 26 yesterday. So it's yesterday's high. This was this morning. Not yesterday's high again, 17, and then that 1740, and we've gone through it, and it's 1738. So it's just having a strategy that works. Okay. Jose, absolutely no problem, my friend. I'm here to help you, honestly. Ask me anything you want. Doesn't cost anything. Join us on Discord. Join us on. Open an account with us. Hope you've got an account with us. It may not, as you're on YouTube, but anything I can do to help, please ask. Don't be afraid. There aren't any stupid questions in this business. And as I said, it's finding something that works for you. The most important thing is that, and how comfortable you feel with trading. Anybody can learn to trade. Anybody can follow rules. Trouble is, as human beings, we don't like following rules. We don't like being disciplined, and patience is very hard. As I know, I've got a 3-year-old grandson downstairs with his grandma, because I'm working from home today, and I can't wait to go and see him. And he's not great patience, his discipline. He's obviously got to learn that, and that's what we do as we grow up, don't we? So, Jose, thank you very much. Absolutely no problem. What are you saying? So you don't trade manually, but program? I've got all sorts of different ways, Jose. I prefer to do it manually. Yes. I have an automatic system that does an end of day. I have a system I do manually at the end of the day. I have about 7 different approaches. The one I'm sharing with you here on Discord is an end of day trend following strategy. So the stuff I put, hang on a minute, let me show you the Discord group. So the stuff I put up here on the trading strategies platform is an end of day trend following strategy. So these are all looking for initial like 30, 40, 50 pips. Some of them have quite big stop losses, but and then I have the other one. When I say also, that's more a similar approach, but it's a bit more aggressive. That's all. And when it says also, so these are standard trades. This Kiwi CAD, Kiwi Yen, and this is a more aggressive one, but it's in an end of day basis. So I'm posting it here, sort of 10:30, 11 o'clock my time, London time, which is GMT plus 1 hour. So I don't know where you are in the world, Jose, but that's what I'm praising. I have other systems that are automatically programmed. I have investing systems for my sort of pension portfolio, all that sort of thing, something different, which we don't talk about here, obviously, but that's my skin in the game. So I'm really doing this. And then at the other extreme, when we're looking to, I get, I want to do some scalping. I really like scalping the indices, particularly the DAX and the Dow, the hour before open. So 7 till 8 in the UK for the DAX, and the hour around open for the Dow, and obviously to close sometimes. But too much consumes too much time sometimes. But anyway, that's my approach. That's what's worked for me. It's took me not many years, but it's taken me a while to find what works for me. So although it works for me, Jose, it might not work for you. Okay. Can you briefly explain your strategy? Well, hopefully I have. That's what it is. It's a trend following approach. So it's based on this. That's why I use this setup as the default. It's based on these moving averages. Obviously, it's something I've worked on over the years. But the most important thing I'd say, Jose, as well, in my strategy, when I look at the program of it, the coding of it, it spends a lot of the code. I'm not a programmer, but Python's made things a lot easier for people like me. The risk management side of it, the money management element of it, it takes up a lot of line of code rather than the simple trend following, get in, get out, where to put your stop loss. So yeah, there we go. Hope that was of some use. Where am I? So yeah, that was a bit of a surprise from the US, the PCE number coming in hotter than expected at 2.7%. On an annualized basis, 0.2% for May. So what's June going to look like? We don't know. We'll see as we move forward. It's reiterating what Powell and his other doves, if you like, or hawks on the doves on the committee are saying, and depending how the obviously the administration will spin it very, very differently. Again, focus what the Michigan numbers say as well, as far as how the consumers feeling. These sentiment numbers that have collapsed significantly. The hard data has been holding up. This is a piece of hard data that's starting to show there is a bit of stickiness in this inflation number, and this big fall in income, this personal income. Look at this, and spending was very significant as well. Might be people just hoarding or waiting through the summer, see what happens. So all eyes now really into September in that final quarter of the year as well. So thank you for your time today, everyone. Have a safe weekend. I'm going to wrap this up. It's nearly top of the hour. Next week is a little bit quieter. We obviously, saying it's a little bit quiet. We've obviously got non-farm payrolls on Thursday rather than Friday, because it's July the 4th next Friday. Let's just bring in next week. Here we are, to here. Apply. Let me just take the filters out. Just these countries, just make the big stuff. I'll leave all the other countries in. It's too many really. But obviously ADP's on Wednesday, non-farm payroll Thursday because of the July the 4th holiday, and then the following week July the 9th is that deadline that Trump had put for the trade deals. July the 4th is when they were trying to get his big beautiful bill, as he loves to call it, through Congress. So we'll see. So Monday, GDP from the UK, PMIs as it's the start of the new month. We kick off with China and some manufacturing data from Japan overnight. Lagarde and Bostic speaking on Monday. I think is it the Sun? I think there might be the. Let's do this on Forex Factory. Easier to read. It's not. It's on Monday. Present issue. Sintra is the EC. Yeah, Sintra in Italy. It's the ECB have a away day or away week basically for central bankers in Sintra in I think it's in Italy, isn't it? Beautiful little island there. The Fed do a similar thing out in Wyoming in Jackson Hole at the end of August. So this is the ECB's away day. So there'll be lots of central bankers speaking at that next week. So that's starting next week. So it's PMI week because it's the beginning of the month. So those on Tuesday as well, Lagarde and Powell and Bailey all at Sintra. Sintra will be there. So Powell's speech on Tuesday is the big event, and then we got manufacturing ISM out of the US as well on Tuesday, again ahead of compressed because of the Friday Independence Day. Jolt's also on Tuesday. Wednesday is ADP as normal. Ms. Lagarde, another speech at Sintra. We got the weekly claims pulled forward to Wednesday. Sorry, they're on Thursday, not Wednesday. No, they're not pulled forward. It's non-farm payroll that's been pulled forward. Sorry. Usual Wednesday oil inventories as well. Thursday, I say, is when everything's been compressed. We got lots of PMIs out of Europe. We got non-farm payroll at the normal 12:30 GMT time, and weekly claims. It'll be interesting to see how those come together. Remember that it was better this week at 2:36 from that 2:40. Still relatively healthy jobs market. See what the U6 unemployment rate looks like. Unemployment 4.2% it's expected to hold. And then Friday, and then after that, we've actually got the services manufacturing PMIs out of the US as well. Now Friday's obviously Independence Day, and some factory orders out of Germany on Friday. So we start the new month and quarter next week. So PMI week, non-farm payrolls, ADP, those weekly claims which have grabbed attention. More chatter, no doubt, from President Trump over all sorts of things, from Ukraine to Israel to the Fed to trade policy, to some what he calls crazy radical lefts, socialists in America, no doubt something. But watch the weekend. Anything can happen. So take care, be safe, and I will update everything for June and for the first half over the weekend or later today. See how things go. So thank you very much, Jose. Final question: where can I see your trading results by monthly reports using this particular automatic strategy? I'll stick it up on Discord. Come here. Come here. I think come here. I put this group on Discord. The trade under our prop trade trading strategies. I pull these every night. I update every week. So there we are. Last week we closed, had a horrible week. We lost 565 points last week. First losing week since the second week of April. And after 3 weeks of June, we were still 116 points up, even though we'd lost 563 last week. Okay, so we'll update everything properly. It'll be here. Look here. So look on the prop trade board, Jose. I don't know if you're there, and I will put it up there. Okay. Hope that's answered your question. Hope you're a client. If you're not a client, do come and join us. Obviously, I always say, why not? This is the best way to get into trading. If you're new, you can get a 25% discount off all our challenges. There's no overnight fees or anything like that. Standard challenge is what most clients go for. 2-step challenge. If you're a bit more aggressive and you want to do an express challenge, you can go a 1-step. So an express for $25,000. If you put new 25, you get a 25% discount off the $175 challenge dollar price, and that brings it to around about $130, which you get back obviously if you get to the funded account stage. And then 80% of any of the profits you make when you've got your funded account up and running is cash that you keep for yourself, and you can get paid every single Friday. We've had no problems getting people paid. We paid typically through crypto at the moment, but you've got to get through the challenge first. So a 1-step express challenge needs a profit of 12%, a maximum loss over the account time, the phase of the challenge of only of 70%. So it's quite tight. But if you've got as it says here, if you've got a 10 if you've got a $25,000 account, you're only looking to make $3,000 on top of that. You can't lose more than $1,000 a day, and a maximum loss of 1,750, so 7%. So it is quite tight. But you got 1 to 50 leverage on most things. You're allowed to trade the news. Some prop firms don't let you do that. So our standard challenges don't let you trade the news. Some people like to trade the news. I like for the news to settle rather than trying to second guess what's going on. But there's a 2-minute window either side of the news, before and after the big high impact news. You can trade weekends if you want to do that. You want to trade crypto. That's the real live market that's available. But obviously volumes are lower, so be careful about that. I don't know why people are so obsessed about trading at the weekend. Just be careful. Spreads are wider, or can be wider, not always. And there's not much volume, so be careful. You can get caught out at the weekend. But people like that, so that's why we offer it. And then as I say, you get your challenge fee back, the $130, and then any profit you made, you get 80% of that. If you think you're a pro, the profit split is 90%. So 90% of anything you win, you get back. There's a 2-step challenge on the $25,000 account. 10% and 5% of step 1 and step 2. Again, you see the new trends allowed. Do it in 3 days if you're in a rush. Again, I don't know. I don't know why people are in such a rush to run through this, but 3 days is minimum. A pro account for 25,000 would cost you $195. If you're new, you get $50 off that, or nearly $50 off that for 150, less than 150 dollars. If you're already trading with us and you've had a few accounts, Discord, I think 20 is still working. So if you need to be registered with us under Discord. So Discord 20 would give you a 20% discount. There it does. So that 195 becomes 156. So give it a go. You got literally, I'm going to say nothing to lose, but you got obviously your challenge fee to lose, $150. But you know the potential is absolutely endless. You know, you can scale up to millions if you know what you're doing and you keep it tight. 90% profit can be yours in real dollar or crypto terms with a big funded account. So why not give it a go? We're here to help, and I'm here every day. So hope that's of some use, guys. Nice to speak to you all again. Thank you for your time. Jose, I will post those datas either today or tomorrow. Certainly during Monday or before Monday. Anyway, take care, everyone. See you on Monday. Have a safe weekend, and as ever, may the pips be with you. Let me leave you with the our euro trade has just gone another leg higher in the hour we've been talking. So thanks very much. There's our stop loss from earlier the week, and that'll be getting pulled up probably to this 50 hour. Or it depends what the 4, where it is on the 4 hour. Let me just do that for you now while we're here. 4 hour, it's above the 20. I might pull that up a tad again. A bit low to bring it all the way to 17, but yeah, we're locking in some nice profits on the euro and all the dollar short positions we have. Okay, take care, everyone. See you Monday, and have a great